is one of the country's largest wire and cable manufacturers, and one would assume that the construction slowdown would have taken its toll on the company's sales. But hey, the stock has actually gained nearly 85% since its listing in April. So where do investors find value in the company? Sharad Dubey has done some research to try and figure out why its share market returns have beaten some of the other wire manufacturers, as also almost any other stock in the newly listed space. Sharad, what's working for it?
Well, basically, first we need to check the returns, coming in from April itself. So we dug out the data. We saw that Polycab, as you had mentioned, 85% since its listing. KE Industries, that came in at almost 14%, and the BSE Consumer Durables Index has grown by 7%. Negative downtick was seen, for V-Guard Industries and Havells, as well as Finolex Cables, which was pulled down due to weak institutional orders and also the industrial slowdown, as you have mentioned. Now, we also see post its IPO, the debt levels, have come out in very comfortable levels. In FY16, the debt levels stood at almost 0.44 times itself, and then you can see the gradual fall happening, and in the H1 FY20, the debt to equity ratio stood at almost 0.05. But however, as we had pointed out, that it is the leader in the cables and wires segment. Now, majority of its revenue, if you see, that's roughly almost 86% of revenues comes for Polycab. So if you see, KE Industries and Polycab are the pure play cable and wire players, with the V-Guard, Havells and Finolex Cables are also operating in the electronic consumer durable space. And Neeraj, one thing more I'd like to point out is like the company is enjoying a 12% overall market share, and in 18% market share the company is enjoying in the organized space itself. Now that brings us to the margins, what is the margin play is looking like, and this is relatively a good margin play. The company is having, and it has been increasing at almost from 9.3% in FY16, and and going into almost 11.8% for the first half of this financial year. Except barring Finolex Cables, which is having a higher margin, but they did see a decline, coming in from FY19 for the first half, from 15.4% to 12.5%. Apart from this, we see the company itself, is moving from its traditional wires and cables segment to the fast-moving electrical segments. So in that segment itself, the contribution from revenues have actually increased. If you see, almost 216 crores was there in FY16, and this has risen to almost 643 crores for FY19, and for the first half itself, the sales have been almost 435 crores. So the contribution to the revenues from this segment has actually increased from 4% to 8%, and the growth has been a phenomenal 51%. And the management itself, when we spoke about it, they were planning an aggressive marketing spend as well as a capacity expansion for this FMEG segment. So that is something which, even the brokerage community, has given a thumbs up, to drive up the margins. So apart from this, Neeraj, if you see the overall industry growth for the cable and wire, almost 14.5% compounded growth we can expect, from FY18 to FY23. So in layman terms, if we put it, the organized space, which is having almost 66%, this will move to 74%. So the company will benefit from consolidation as well from this move itself. Apart from this, a 950 crore worth of order is expected, from supplying of cables, and this is going to be realized in the second half of this financial year itself. However, there are certain overhangs, which we need to watch out for the stock, even though, the stock is at its, lifetime highs around. So we see the residential construction is a pain point, and since the construction has been, it's on a tepid move, so that is something which we'll be watching out for. And also there will be volatility seen in the aluminium and copper prices, which has actually resulted in destocking of some copper inventories. If you do channel checks across, BloombergQuint had earlier done a story on that as well. And Neeraj, apart from this, the analyst community still thinks that the valuation catch-up is happening. So around they have a PE of around 21, with Havells and V-Guard having around between 37 to 40. And apart from this, the new dealership expansion scheme, especially in the Eastern India itself, that is something, which analysts are talking about, and, they are giving a reason for this rally for this. So it seems a good valuation catch-up.
Yeah, the valuation catch-up compared to Havells, for example, right up there. Sharad, just one quick follow-up. The FMEG space that you spoke about, which is working well for Polycab, is it doing well for some of the other players as well, or is Polycab an exception?
So other players itself, they are also doing well, but the thing is the margins which you're talking about, the margins for cable or wire, the company management itself spoke about between 11 to 13. So if we see a more contribution coming in from the revenue, so we can see an uptick in the margins itself. And the management itself, they told to BloombergQuint BloombergQuint itself in an interview that they're targeting a 12% margin. So right now it is standing at 11.8, and we are in the middle of the year. So,
Okay.
so hopefully there'll be something good auguring well for the stock.